What is up, everybody? Hello and welcome to another episode of This Week in Real Estate. I'm your host, Ray. We've got tons of news to talk about. If you notice from the thumbnail, we're definitely going to be diving into AI. We've got some earnings reports to talk about. We are going to cover them all really quickly. But before we get into all that, let me introduce to you a guest host and also he whom is mostly always first. I guess you're not always first, but most of the time you're first. Please welcome Matt LaMarsh. Say hi, Matt.
I do my best. My best, everyone. Hi, from Atlanta, Georgia here. How are we doing today? How are we feeling?
Matt is a phenomenal agent in Atlanta, so if you need one, you know where to go there too. I like how you matched your neon sign with your shirt. That's good.
That was on purpose.
Yeah.
Long been prepping this all week, actually. So
getting ready for this moment. I need a polo, maybe look a little nicer than the t-shirts. Then J Marks will get off my back for it. Well, thank you guys for joining us. We're broadcasting in a whole bunch of locations this week. Of course, we're on Clubhouse as we are normally. We're also broadcasting on Facebook. Oop, there goes it never fails. I have it on silent or what's the do not disturb. So it's just supposed to go straight and it's not. So I don't know why. Sorry about that, guys. Anyway, we're broadcasting on Clubhouse. That's why you can hear my phone through that. It's because we use the phone to broadcast on Clubhouse, but we're also broadcasting on YouTube, Facebook in 2 different places, and Twitter for our first week ever to be broadcasting on Twitter and LinkedIn. And we're also broadcasting on Matt's Facebook. So that's one of the cool things about Restream is that when you have a guest, the guest can say, oh yeah, you can have access to mine too. So first time trying that, we'll see how it goes. Matt was also first on YouTube. So thanks for doing your weekly.
I had to go back and watch the replay because I was worried that I might have missed, a special announcement or something. And I wanted to make sure this week, especially, I was actually first because last week got all screwed up. So.
That's right. Last week you were exactly first. Well, thanks for joining us. If you're listening in Clubhouse and you want to contribute to the conversation, just raise your hand. The moderators take a look at it and bring you up. We are going to cover a whole bunch of headlines first. We're going to cover all the earnings reports that we've gotten into in this last week or so. It's earnings season. So who made it and who failed and who's in the money and who's not, who's in the red. But we're also going to be talking about at the end of the show, artificial intelligence versus real estate agents. And so this is where the thumbnail came from this week, where it says agents versus AI. And I've been singing AI's praises for a couple of weeks now in a lot of masterminds. And we've been talking about how we're using Chat GPT to great success to make our jobs easier and to make it more effective in producing content or more efficient in producing content. And it's still pretty accurate, even though we have to double check it for accuracy every now and then. It's still pretty good. But this week, something happened with Zillow. They didn't partner with, somebody said Zillow partnered with AI. That's not exactly it. Zillow created a plugin for Chat GPT that allows some users, and right now I think it's in beta testing or whatnot, but it'll allow some users to use Chat GPT in connection with Zillow. So my big question is this going to take the jobs of a lot of real estate agents? Is this going to replace the realtor in a lot of ways? And I think you might be surprised by my answer. I'm not real bullish on the realtor in this situation. So in a previous episode, we dove in and we asked like a real estate agent's professional opinion. What would you tell a client in this situation? Then we gave that exact same prompt to Chat GPT, and the advice was almost the same. Like they covered everything in Chat GPT. So stick around to the end of the show. We will talk about that. And then Matt will add a little commentary here and there as we dive into these news articles. And speaking of which, Matt, the first one up. I love this title. I wrote the title because some would say this is a clickbaity title, but I actually wrote it. So let's get into what's happening with the inventory here because it ain't pretty. Housing Hunger Games. Buyers battle in bidding wars among historic listing drop. So the housing market is hotter than ever, with homes selling at lightning speed due to a historic drop in listings. While the Federal Reserve has indicated a pause in interest rate increases, elevated mortgage rates are still encouraging homeowners to stay put. This has led to an intense bidding war among buyers competing for a limited number of homes available. However, the Fed's decision does alleviate some uncertainty for both buyers and sellers in the market. Nearly half of the homes sold in the 4 weeks leading up to April 30th went under contract within 2 weeks. This is down from 51% in the previous year and up from 46% a month earlier. Home buyers are in for a heated competition as new listings in April were down 23% from the year earlier, outpacing the 17% year-over-year decline in pending sales. As a result, homes in desirable areas and reasonably priced are selling exceptionally quickly. Redfin economics research lead Chen Zhao said, unexpectedly bad inflation data, more banking turmoil, or failure to raise the U.S. debt ceiling could throw a wrench in the Fed's plans. But home buyers and sellers can feel a little more confident that the mortgage rates won't skyrocket again. So it's like all of these terrible things, but hey, mortgage rates will probably not skyrocket again. So despite the shortage of listings, both new listings and pending sales did rise month over month basis in April, a typical trend during springtime. However, this has not been enough to satisfy the demand. Though a pause in the Fed rate hike doesn't guarantee a significant drop in mortgage rates, it does offer some relief to those navigating the housing market. The current state of the housing market is marked by fast sales and bidding war fueled by this historic listings drop. So basically, Matt, it's the same old, same old. We're almost back. We're almost within a percentage point of where we were last year as far as how fast homes are selling. So do you see any reprieve of this on the horizon?
Not in Atlanta, Georgia. I try to focus on what I know, right, and what I need to know. I think it's interesting, and especially through Clubhouse, we talk a lot about, the national perspective and sometimes even internationally, which I
Yeah.
think it kind of gives us an interesting perspective, especially when you've seen, so many people moving across state lines and stuff. But as it relates to Atlanta, Georgia, and I was just telling our CEO this, like it feels like 2021 on repeat all of a sudden. And the
Yeah.
inventory is about the same level. Prices actually are significantly up from where they were, but the environment, the activity, the number of listings, I mean, it's all pretty much exactly where it was like 24 months ago.
So why does it seem like I feel like maybe I'm wrong, but it feels like there's way more dire headlines, doesn't it? Like it feels like everyone's saying this is, oh, I know what it is. Election season.
Yeah, exactly.
I wonder if that's really what it is.
Well, I saw, and we aren't going to talk about this article, but it's someone else. You're in real estate, you always get articles about real
Right.
estate from
Right.
clients, from other agents, from whatever. And I saw one that was written by a University of Florida professor about how Georgia and Atlanta, more specifically, was overpriced by 50%. And I'm like, that sounds like a ploy just to get to people in Florida, is what it sounds like.
It's like, you know what's interesting about stats like that is when they put them out there, like overpriced by 50%, what they actually mean is that 50% of the homes recently had a price drop.
Right.
But they're interpreting that stat in a completely different way. That is one of the reasons why I like the Redfin data. I'm going to show you guys this article really quick because I think they do a good job in presenting the data well. I love you guys know this. We love charts. Let me get a different view here. There you go. Okay, so check out some of these charts. Why is it cutting off? It's cutting off the side here. Still. Okay, hang on. I'm just going to make it big screen. I'll make us little screen so I can show you guys these charts. All right, so the median price, 2.7% is down 2.7% year over year. We did show some of these last week, so I'm not going to show a bunch of them. I'm mainly going to focus on these inventory ones. Home buyer payments are up 9.7%. Pending sales are down 17%. New listings of homes down 23%. This is the key stat that this article had to do with. So you could see this dip that we had in inventory April to July of the year of the pandy, the COVID year, if you will. Mm-hmm. We are near those levels compared to the previous 2 years. So what's interesting, Matt, is you said it feels like 2021, but in reality, it's closer to 2020. Mm-hmm. And we know what happened in 2020. It was crazy good for sellers. I think that's when we had the highest price escalation that we've ever had was the April. Well, I guess it was July to July of 2020 to 2021. So do you think we're in for some elevated pricing now?
I mean, so this is an interesting, and this is only anecdotal, but I'm hearing this a lot. 3 of the last 4 listings that I have were bought by real estate agents.
Oh, that's
Now,
interesting.
I think, and I agree, I think the reason that's really interesting is because we are in this every single day. We see the
Yeah.
value increases, we see the interest rate, we see all of it, right? And we have to play on the same field. There's no, insider trading that's taking place or anything. But to me, 75% of these, people that are buying these homes are people that are seeing the inventory every single day, that they're in the market every single day. They're really good agents that are buying these houses, and they're really aggressive about their offers on these properties. So that's the first piece. The second piece, and you mentioned 2020, that little lull we had in Georgia, at least it was all of like 45 days from when we didn't hear from anyone. And they were like, are we going to die or should we buy a house? There was no like in between. And so, yeah, all of the second half of March and all of April, nothing was happening. And then May 1st hit, and it was like everyone came out of the woodwork. We hate our house. It's too small. It's not in the right location. We aren't going to an office anymore. There were a million other new reasons why all that stuff kind of came out and came to a new place. But the one thing I think that's different here is that the interest rate. So,
Yeah.
the people that were super, we call them inelastic and elastic, the major difference there was the people that have to move do not have a choice.
Yeah.
I have several relocation clients right now that are like, Matt, I don't have a choice. I got to be there in 30 days. I got to be there in 60 days, and we'll pay what we got to pay. And so, they aren't affected by it. But the people that were kind of passively looking, all those people went away, for me at least.
That is interesting. And those real estate agents that are purchasing the properties like you're talking about, there's some kind of heightened perceived value that trumps the interest rate. Or maybe they're keeping their old house at the low rate and then just buying another one. That's Pete Thorpe. He joins us on Facebook. What's up, Pete? He says, I bet the number is skewed by construction. It's way less than 2 weeks, more like 3 to 4 days. Now, that could be it, where they see the house that just started under construction, then finally sold. So it looks like, 3 months on the market, but in reality, once it was finished, it was like, only a couple of weeks. That could be. Yeah. He says Zoom and gloom sales. I guess he probably means doom and gloom, but in the post-COVID era, Zoom and gloom is kind of I don't know. I got to figure out a way to use it. I like that. Zoom and gloom.
That's awesome.
Okay. So let's talk about the data on the pricing, because we do have some of that just recently released as well. All right. Defying declines. Home prices rebound despite affordability challenges. So the spring housing market is in full swing, with home prices rising over 2/3 in the major markets in the first quarter of the year. Contrary to earlier predictions of a possible prolonged downturn, the latest data from the National Association of Realtors reveals a quick stabilization after a moderate decline in home prices for about half a year. So it's like a 6-month adjustment. Nationwide home prices have soared over 40% in less than 2 years, leading some to speculate that those house gains may be undone. However, the Q1 metro home price data shows that prices rose in the majority of the metro markets, albeit with a 0.2% decline since the same time last year. This uptick in home prices is typical trend in the housing market as the housing market builds momentum towards the peak of activity in the summer months. According to the National Association of Realtor Chief Economist Lawrence Yoon, pandemic migration hotspots like Austin and Boise, which we talked about Austin last week, where they were on sale, where places have fallen over 10% year over year, they could already be experiencing the end of their downturn. Yoon explained, due to the intense housing inventory shortage, multiple offers are returning, especially on affordable homes. Price declines could be short-lived. The areas that saw the largest appreciation were California and other pricey pandemic markets, such as San Francisco, San Jose, and Reno, Nevada. You noted, generally speaking, quote, this is a quote from him, generally speaking, home prices are lower in expensive markets and higher in affordable markets, implying greater mortgage rate sensitivity for high-priced homes. They go into some details on some of these. I'm going to kind of skip the nitty gritty here. The spring housing market is witnessing a rebound in home prices in majority of major markets. So this is back to Matt. This is kind of what you were saying as well. It doesn't look like there's going to be a prolonged price downturn. You're echoing what the chief economist Lawrence Yoon said. It's almost like you're knowledgeable about the housing market, Matt.
I know it sounds strange, and my clients often wonder, I wonder what Matt's doing right now. Call me or text me. I'm generally looking at data.
He's just looking at reports all day. That's what that's what Matt does.
No, but to that kind of same point, and this is one thing that we obviously try to pass along to our buyers because with a little bit of uncertainty, whether it's interest rate or the market in general, when you see real estate agents buying houses at these
Yeah.
values, to me, there's a lot of certainty there. But additionally, like you said, from 2 to 3 years ago to now where we are, I don't think anyone's expecting another 40% increase or jump over the next 3 years. But when those interest rates become a little more fluid and they're moving a little bit more, and it's funny, I was in a closing last week where they had the original document from the original closing in 1971. Guess what the interest
Whoa.
rate was?
What was that?
Guess what the interest rate was?
Well, the 70s, weren't they pretty bad? I'm going to say 8%.
7.7. Yeah. Not
Ha!
wrong.
It's
Now,
almost like I know the market, Matt.
it's like you and I are just looking at data all day long, even from the
Yeah.
70s.
I'm such a
Um,
nerd.
but that was really interesting, and especially for the buyer that was an agent sitting across the table to go, 6.5 doesn't sound so bad considering it was 50 years ago. But
Yeah.
when you have buyers looking, especially right now, the worry of interest rate, the worry of is this market
Yeah.
going to continue? And I tell my clients all the time, every local economist I've talked to on podcasts and read articles, all this stuff, they're telling us that we're okay. We might see like an 8 or 9% increase in appreciation over this current year, which is great actually. I mean, normally we average like 3 to 6% in Atlanta. So that's actually more than the average, if you will. But the inventory being so low, that's really what's driving all of this. So, we don't have a choice until a boatload of homes come out of the woodwork, which there's no sign of that happening anytime
Right.
soon. We are still going to be in the same place. And our inventory over the last 3 months has been basically flat. The new homes that come on the market all get sold. And then you have a little bit that are left over. But 5,200 homes come on, 5,100 get sold, and then the other 100 get price reduction.
Yeah. Well, I wonder if the Fed is looking at this because whenever they first started their rate increases, one of the things he said is he was looking for a correction in the housing market. And I don't think we haven't seen that. I would say we haven't seen a housing market. Some people call the October to February time period a housing correction, but in reality, that was because rates approached 7% and a lot of buyers pulled back. Homes were sitting on the market a little bit longer. Our investors got some incredible deals during that time period, but that's like long gone.
Mhm.
So is the Fed, are they waiting for another sign to then like crush us? And this brings us to the next article too, because Lawrence Yun has words with the Fed for the Fed. Anyway, Lawrence Yun goes right at him. So the housing market trend and the Fed's mistake. Lawrence Yun's insight on the future. I think this happened just yesterday at NAR's. There was like a National Association of Realtors legislative meetings in Washington, D.C. conference. So yeah, there it is. It's right in this article summary too that I wrote. I should have known that was going to be next. At the recent Realtors legislative meetings in Washington, D.C., National Association of Realtors chief economist Lawrence Yun expressed his disapproval of the Fed's recent interest rate increase during his presentation on the housing market trends. Yun argued that, quote, they should not have done that. He believes that the rate hike was unnecessary considering that inflation is at 5% and, quote, moving the right direction. Yun noted that existing home sales were currently below pre-COVID rates, but may be stabilizing, stating that we have to stop the bleeding to enforce improvement and let me reread that. Quote, we have to stop the bleeding before the improvement can take place. He contrasted this with the new home sales, which returned to their pre-COVID levels as well. Yun attributed this difference to inventory, while existing homes are on the market around 40% below what they were in 2019. New inventory is higher than it has been for years. So that means new home specifically, new construction is higher. Regarding some home prices, Yun said 70% of the country is seeing positive gains in home prices, 30% are seeing negative. He didn't foresee home price collapse due to the lack of existing home inventory, as 60% of listings currently sell within a month, 28% are attracting multiple offers. That seems low to me, but Actually, I guess that's about right, because some people are still pricing with those aspirational sales prices. This was a funny joke that Lawrence Yun said during the presentation. He was looking at divorce rates being lower in 2022 than in 2021. And he said, you may hate your spouse, but then you realize you love your 3% mortgage rate. But finances is a huge issue for those going through a divorce. So maybe that's kind of leaning that direction. Robert Dietz was also there, chief economist for the National Association of Home Builders. And he said that there needs to be more housing units to boost the inventory. Obviously, he's saying more people need to build houses. The long-term labor shortage in the industry is going to remain with them. That's the problem that they're continuing to have. Dietz emphasized the country would need to build more than 1.1 million single-family homes annually to meaningfully reduce inventory shortage. However, the NHB figure is not expected to rise over 1 million until 2025. So still some of the same issues. Interesting to hear Lawrence take on the Fed directly and say that was a mistake. The Fed is looking, and we've said this over and over on the show, so I'm not going to belabor the point, but the Fed is looking at two things. They're supposed to be monitoring labor, jobs, how many jobs we have, and the orders on producers. And the second thing they're supposed to be looking at is the prices, how much things are going up in price because of the increase in orders. So the way this works is the Fed raises the rates. As they raise the rates, banks now want to give money to each other instead of putting it out into the economy. That creates a contraction in the economy, which generally means people lose jobs. It generally means that people have less money to spend, so they stop making as many orders. So the producers now don't need to make as many things, and they have enough things. So that means the price on those stabilize, and they don't have to keep increasing them because they have more orders than they have widgets. Well, the jobs report from Friday was really interesting because it was actually higher than expected. So on one hand, you still have the rising cost of housing, except for rents. Rents were lower, which was one of Lawrence Yun's key points in this presentation. But you still have the rising house of home cost. Even though it seems like it's stabilizing, we just talked about the report that it's defying the downturn, that they're still going up. And the Fed is looking at that saying, I want a correction. But at the same time, you have this rising jobs number, which is unexpectedly high. But some say that inflation is kind of tampering is not tampering is what the Fed's doing with it, is that inflation is tamping down a bit and moderating some. So are we looking at, because of the continued rise in real estate prices, which is a key barometer of total inflation, and because of the increase in jobs, are we looking at another rate increase? Or do you think he's going to finally pause these rate increases moving forward?
That's a great question. And Pete kind of talks about it. And this is what I think all have seen. Those are the, really active in the last 3 or 4 years here: death, divorce, relo, and unexpected hardship. That's pretty much everyone that's been moving. And we were in a meeting yesterday with our brokerage, and we had a little bit of time at the end of this little marketing mastermind thing. And I was like, how many of you have sellers that would become buyers if they could go find something? And everyone in the room raised their hand, which to me is, that's a really good indicator that there's a lot of this like pent up demand in terms of listings. But as it relates to the interest rates, I mean, the problem is not interest rates. Like, again, there's always going to be people that are affected by it and that will never make a decision based on one figure or one factor of a real estate transaction. But when you don't have a choice, death, divorce, or relo or whatever, right, and you have to be somewhere, you're going to be the first one to kind of step to the plate, more or less, I guess.
Yeah.
But there's this huge group of people that are waiting for those people to move so that first domino can fall, and then the other ones kind of come behind it. But yeah, we haven't seen a lot of that. Now, I will say, I think there is that pent up demand that's kind of being released, and people have just realized that this is what it is. It's going to be the percentages that, we're in the 5s and 6s and 7s and not in the 2s and 3s and 4s. So, it's just the reality of where we want to be. But the conversation I have with my buyers especially is, do you want to be in this house for 5 years or more? Because if you don't, this is probably not one we should be offering on. And the same thing with sellers, trying to find some motivation. Where do you want to be 3 to 5 to 10 years from now?
Yeah. Where do you want to spend your life? And is it worth the higher interest rate to spend your life somewhere where you want to? Or do you want to stay where you are?
Yep.
Mike V says a long pause. He thinks the Fed is going to keep rates higher for longer, is how the newscasters will say it. Higher for longer. Long pause. They're not going to drop them anytime soon. I feel like if the say again.
I thought he was just picking on me. I thought I took a long pause.
Yeah,
thanks,
he
Mike.
says that. Yeah, thanks, Mike, for critiquing. He says the lack of inventory is partly due to would-be sellers that have nowhere to go. Yeah, that's the they have nowhere to go because of the lack of inventory. So there is lack of inventory, and then he does say that too. He is also making fun of you.
Hey guys.
Olivier says, I am so late. Yeah, welcome, Olivier. Thanks for joining on YouTube. Jack Atteridge, what's up, buddy? How are you, man?
Hey, how are you guys doing? Hey, Matt.
Hey.
Look at Matt up on the big stage today.
I know. Look, Mom, I made it. Woo!
I'll bet you were on time today, weren't you?
Yeah.
You better believe it.
That's true.
And color coordinated too. Yeah.
Color coordinated.
So looking at this a little bit further downstream, the crisis could end up being, inflation in real estate, and because of the lack of supply, I'm seeing offers on properties from buyers that are just so desperate to move that are crazy high, and we saw it in other products over the past couple of years, but with such limited supply, it's like somebody stopped making chips, I guess is the best comparison that I could use, and look at what it did to cars. And
those kind
again,
of chips.
And I'm
Got it.
I'm going to go back and clarify just a little bit that I think that this is mostly influenced in busier metro areas than outliers, but there's this fear that I have of lack of supply drives prices up to numbers that are unsustainable, and then that is the linchpin in this whole thing. I don't know. There's a lot of uncertainty.
So what happens when prices go up to where people can't afford them, though, Jack?
Yeah.
Well, they just come down? Isn't that how the market stabilizes itself?
I'm here. Sorry.
Oh, can you hear me? I don't know if you can hear me.
Yes, I can.
Okay.
Sorry.
I was asking the question, what happens when prices go way up? Is it eventually, aren't they just going to come right back down? And that what happens? I mean, if they go up to a point where people are not buying, then surely they're just going to come back down because of capitalism. So the question is, what is that point? There's an article that we're not covering that Dusty put in the contributors chat. And if you guys want to join the contributors chat, just send me a DM. I'll add you in there. But she posted an article about Wall Street pulling back from buying a lot of real estate. And they said that they were looking for 15% returns and 4% interest rates, and then they could get their profits back. To which Pete Thorpe in the chat said, well, no, Sherlock. So I think that's what everyone would love. But if you have a major pullback from institutional investors like that, who aren't able to keep finding the deals they were looking for so easily, then it would make sense, I think, that you would start to see some of those prices moderate or at least stay the same. But so far we haven't seen that across the board. Mm-hmm. Mike said, when you look at monthly payments, I think we're already unsustainable in a lot of areas. Okay, so if that's the case, playing devil's advocate, then it should start to go down. Olivier said, the mid-tier market here has slowed down so much that entry-level market is hot. In the bottom 1/3 of the inventory is huge here too. All right, let me see let me cover this next article, and then we're about to talk about Chat GPT plus Zillow taking all of our jobs. So, which Mike V says, if when unemployment's rising, it becomes a story. Maybe unemployment will be rising from all these real estate agents getting out of the real estate industry. But no, let's not go so dire straits, right? Okay, I'll pep talk myself. But mortgage applications, they made a surprising turn after the Fed raised rates. So mortgage demand rises after the Fed hits a pause in rate hikes. Now, this Fed hitting a pause in rate hikes, there was just some language that they took out this time that 6 weeks ago or whenever the last one was, they had in there. And the language they took out is that they would consider rate hikes in the future. That's the RAIA phrase of the language they took out. Just because it's not in there doesn't mean that they aren't considering it. They're just not telling people to expect another rate hike. So if the economy and the market doesn't do what they think they are, they're going to raise rates again. They're just not saying that right now up front. And the way you will know is a week or two before the announcement, the markets will start to move and all the pundits will say, here's what we're expecting. We think the Fed, although he didn't signify that he was going to raise rates, he probably will another quarter point. But I don't think anyone thinks they're going to go down. So maybe the lack of volatility is really what's bringing people to the market. Anyway, let me get back to the story. Mortgage rates experienced a slight decrease last week after the chairman of the Federal Reserve suggested that a potential end to the historic string of interest rate hikes. Although the drop wasn't significant, it was enough to encourage homeowners to refinance their mortgages for lower rates, which I thought that's fascinating. The average contract interest rate for a 30-year fixed rate mortgage with a conforming loan balance of $726,200 or less decreased last week from 6.48% to 6.48% from 6.5. As a result, applications to refinance a home jumped 10%, a 0.2% difference in rate, and refis jumped 10% last week compared with the previous week. However, refinance demand was still 44% lower than a year ago. Joel Kahn, Mortgage Bankers Association Deputy Chief Economist, wrote in a release, mortgage applications responded positively to a drop in interest rates last week as the Fed signaled a potential pause at the current level, the federal funds rate, in anticipation of inflation slowing and the tightening financial conditions that will slow economic growth. That's pretty phenomenal jump in the refi market, considering that the rates are really not that much lower. Mm-hmm. You would think that people would kind of want to wait and see what happens, but I don't guess so. I wonder if they're doing that to. I just talked with a guy that's looking for an investment property, and I wonder if people are saying, "Well, I'm going to buy this investment property, so let me refi out of this, take some money out, and then purchase an investment property," mm-hmm. Or are they doing that to improve their home? There's another article that we're not really talking about that talks about millennial homeowners are spending a lot on their home to remodel it and redo it. I guess because a lot of them bought these houses that were not in great shape and paid a lot of money for them. They lived in them now for a year or two, and they're like, okay, now we have enough money. Let's jump on these projects. Mm-hmm. I don't know. But what do you think?
Yeah, I think it's kind of a mix. And one thing you talked on in the last one, as far as the big institutional, we had a ton of that happening in South Atlanta, a ton of it. Like every other house was bought by an institutional investors, and now they're down to like 50% of what they were buying this time last year, which that's a big deal because there were hundreds and thousands of homes being purchased at any given time. But to your point, once you remove that buying power of institutional buyers, you think that increase in value is going to slow just a little bit. But we're seeing the opposite. The mid-tier and top-tier luxury, inventory is sitting longer. It's really sensitive to price right now. $50,000 to $100,000 on $1 million+ home. People are super savvy right now. And because money's a little more expensive, they're not super quick to pull that trigger that they were just, going right after. But the entry level has gone from $350 to $500, and the average now is like $478. It's almost non-existent. And so you don't see homes under $500,000 that sit for more than a week. So I think a lot of the mom and pop investors that kind of took a page out of the institutional lenders and buyers side of things got a little more savvy and were like, well, if everyone's still pretty optimistic about this real estate market, we'll get into the investing piece of things. We have seen a lot more of that here for sure.
Yeah, that's interesting. There's a small city that's one of the fourth fastest growing cities of Arkansas. And it's got, we have a client looking from like 600 to 800 ish. And there are only 8 properties on the market that they have to choose from there. Yeah. Now that's a luxury in our area. I would say anything over 650, 700 would be kind of starting to get to the luxury market pretty healthily. It used to be pre-Pandy, it was over 500. Mm-hmm. If you bought a house over 500, you were in the top 2.5% of the market. And now that's not the case. You have to go all the way up to like 650, 700. Yeah. So the luxury market has moved up quite a bit, but I do see more of those homes sitting. There's still not a lot to choose from, even in that luxury market. So we we'll keep an ear out. Speaking of luxury market, making money or not, I'm going to give you guys one of the fastest rundowns of earning reports that I've ever seen. And hopefully you guys can hear what you want to, and then we're going to dive into this AI deal. That's right. It is earnings season. Zillow had a 13% year-over-year decline in revenue to $469 million, which is a $22 million net loss. However, they're optimistic about investments and building a super app. We'll cover them with Chat GPT in just a second. Compass had a 31% year-over-year decline in revenue to $957 million and reduced loss of $150 million. They're optimistic about the technology platform and a unique way to monetize transactions. Their shares did go up. So did Zillow's. Zillow's shares went up after their earnings call as well. Remax saw a 6.2% year-over-year decline in total revenue to $85.4 million. That is a 3.6% drop in the US and Canada agent count as well. So that's interesting. Total agent count worldwide increased slightly. CEO is confident that an improved U.S. agent count and performance in the near term. Anywhere Brands, which is Caldwell Banker, I know them. Hang on. Caldwell, I can't think of them though. Century 21. Help me think of Matt, help me think of all of them. Caldwell, Century 21.
Anywhere
it's Anywhere Re. What's the Better Homes and Gardens, right? Aren't they?
Yep. Mm-hmm.
And there's another one or two that I'm forgetting. Anyway.
Yeah, Caldwell.
Anyway.
Remax.
No, it's not Remax. They're their own thing. It used to be Realogy.
That's
so if you don't know, it used to be Realogy. Okay. So Anywhere Brands, formerly known, the company formerly known as Realogy, $138 million net loss. 31% year-over-year decline in revenue. And the antitrust lawsuit resulted in a legal cost impacting those losses. So they have substantial cost cutting ahead of them. eXp World Holdings, 16% drop in revenue for Q1 2023. However, they did have a net income of $1.5 million. They increased their agent count 12%. They have strong cash flow. Shares rose slightly after the earnings release. Redfin had a 45% year-over-year decline, 33% year-over-year decline in net losses. So they're losing less, but they're still losing $60.8 million. They outperformed other portals. They aim to break even for its full year. OfferPad. So let's get into two iBuyers, OfferPad and Opendoor. OfferPad had a 51% improvement in net loss to only $59.4 million in losses. 57% improvement in EBITDA. 10% decline in revenue from the previous quarter. They plan to reduce inventory of legacy homes. That's the homes they're still holding on to, they haven't sold yet. Opendoor. Shrinking net losses, improve revenue profit. I don't have the exact stats on this one, so I'm going to have to find those. So it's just a general report. Rocket Companies, $411 million net loss in Q1. Rocket Companies is Rocket Mortgage, and also they have their own brokerage now. Rocket Homes, I think. Right? Let me see if I can find those stats. I don't know why I didn't port those over. Then 75% decline in revenue to $666 million. 69% decline in loan origination. They expect Q2 adjusted revenue of $850 million to $1 billion. All right, so a whole bunch of companies went through there, 9 actually to be exact. Overall, they're all losing money, which is fascinating in the real estate space to see how many year-over-year loss, year-over-year loss, year-over-year loss, year-over-year loss. And then you have EXP does make a gain of some $1.5 million. And someone did the math. It was like that's $69 per agent, which if I was running a brokerage, that'd be tough. That's tough I can't make $69 per agent and be okay with it. Sotheby's, Cochrane. Okay, thank you.
Yeah, I was
Mike
gonna
V
say,
in the comments.
and
I appreciate it, guys.
ERA too. Yeah.
ERA, that was
Yeah.
that was the one I was thinking of, not Remax.
And I like how Mike, because I almost did the con. You just said,
In honor of old Dan.
but I'm glad he took care of us there. Yeah.
Okay,
I'm with
here's
you.
let me cover this
Go for it.
open door. For whatever
Yeah.
reason, my numbers didn't come across here. They had revenue of 3.1 billion, which is down 39% versus the previous year. They had a gross profit of 170 million, which reflects inventory valuation adjustments. They had a net loss of 101 million.
I don't get it. It doesn't make the math make math, because I don't, to your point, like there's only a couple markets in the last 6 to 8 months now that have really seen it more stabilized. I don't even want to call it a net loss, because like our friend Andy C out in California, it was crazy. And then they saw this plateau with the interest rates, and now they saw a little bit of decrease. But really, how much of that was like inflation in the market, in that hyper local market, because things were so crazy for so long? I think it was just like one of those lagging indicator things. But back to the back to the earnings, agents, I think, really need to look at this actually, because if you are making a decision of which brokerage to be a part of or not, and there's a million different reasons why people choose to work with different brokerages, but there should be some value proposition for your client in that as well, in my opinion. And to your point, $39 or $69 per agent is a little worrisome. And I think Olivier talked about it earlier, 5% decrease in renewals, which I don't think really is that much. And I'm with him. I thought we were going to see 10 to 15, maybe as high as 20% here in Atlanta, but we haven't seen that either. It's been more like 4 to 5% as well. So, but this should be one of the things that you're talking about, whether you're thinking about getting into real estate or you've been in for a while. Why is this happening? And what do you guys think as agents, I guess, about these different earnings? Because as long as they're public companies, we're gonna have access to it.
It kind of runs us into the next story too. I put oh, see, this is good. This is a good note. Pete Thorpe, he said, working in the same brokerage as the Ray Ellen is all the compensation I need. Pete Thorpe. I'm going to have that as a quote. Screenshot it now and have as a quote for us. So there you go. Thanks, Pete.
Yeah, you can put that in your Clubhouse bio.
I need to put it in a byline somewhere. I do have a Spitting Diamonds for that guy named Kyle that I've never seen on the app ever again, but I loved it. Olivier with some more stats and facts for us said in 2021 we had 100. No comments here because he's Canadian.
Yeah,
1.2 million.
No, 121.
No, 121,000 transactions. We're on track for under 80,000 in 2003, with about the same amount of agents. So there's less transactions and the same amount of agents.
33% less. Yeah, that's huge.
The pie is smaller, guys. The pie is smaller, which makes it all that more significant when someone runs up and says, hey, you know this website where all the consumers go to find their real estate information? Instead of connecting them directly with an agent now, because we can't rely on agents to actually call people as part of their job, we're going to connect them with a robot. Oh, and don't give me that look. You all want to do this on your website too, so don't even play. But Zillow is the most visited real estate website in the US and has announced the launch of its new Chat GPT plugin, offering users a new and innovative way to discover real estate listings. Eligible users who enable Zillow plugin and Chat GPT will utilize conversational language to inquire about specific property listings or share their preferences for sale and rental homes, including details like location, price range, bedroom and bathroom count. The plugin then retrieves relevant information in Zillow's extensive database of real estate listings and provides users with links directly to matching properties. The Chief Technology Officer, Dave Beadle, at Zillow Group, generative AI is transforming how people search for information. Zillow has been on the forefront of embracing AI machine learning, starting with the Zestimate in 2006, and later introducing personalized recommendations and natural language search capabilities. The Zillow Chat GPT plugin represents the latest and an example of how the company is using technology to to make it easier for consumers to find and move to their next home. I was just joking, guys. Just joking. Take it easy. Zillow's goal is to build a housing super app that offers customers a seamless, connected experience across their real estate needs, including buying, selling, financing, and renting. AI capabilities are already present throughout Zillow's products and services, which, we talked about the neural Zestimate. We've talked about computer vision empowered rich media experiences and the AI generated immersive floor plans. We've already covered all those on the show previously. So this is just another thing. Currently, in its alpha phase, the Zillow Chat GPT plugin will be accessible to a select number of Chat GPT users. If you want to do this, you actually have to sign up to the Chat GPT plugin beta testing service and then get selected as a tester to do it. So I have done that, and I've not gotten selected yet. So we'll see what happens. But as an avid Chat GPT user, I know that the app itself has made my life a lot easier. I find that I can use it to help create information and pamphlets. I can give it a ton of info and then ask it a question. One of my favorite things to do is to ask it a question about my business. I've loaded all the stats and facts of my business into it. It knows how many team members I have and what their positions are and all that stuff. And I needed a quick job description the other day for something we were creating. And I said, hey, acting as Pixel Properties is my team name. Acting as Pixel Properties, give me a job description for blank. And then it spit out this beautiful job description. I did have to edit it some, but for the most part, it was fine. After I edited it, I gave it back to it and said, here's the corrected job description. In the future, when I ask you to recall this, here's what I want you to recall. It also keeps up with our conversation. So I've said, how many job descriptions do you have? Do you remember? It'll say, we remember these 3 job descriptions, and here it is. So it's pretty wild how easy it is for me to use as a automated assistant. But what Zillow is talking about, my question is this going to be able to provide a faster service model for them? And what does that mean for real estate agents? They were previously relying on, bad AI at best to have conversations with their clients. They've previously been relying on real estate agents who, when someone clicks a button and wants to ask a question about a property, it connects them with the real estate agent. That's how Zillow makes their money. Does this Chat GPT integration mean that in the future, that buyer's going to be even more ready? And Zillow, instead of making 30% or 40% on their flex program, whatever they make, are they going to now make 10% more? Can they take more of the real estate agent's income because of how they were able to warm up this lead with AI?
Yeah. So
that's like the character on South Park. Yeah.
So I do think there's first of all, I think there's going to be three camps, right? There's going to be the early adopters that figure out how to use this and become the super hyper users, if you will, that are using it every single day, multiple times a day, to really elevate the experience. Because I think that is a huge problem in our industry and in our space is that, the numbers don't lie. 90% of the business is done by 10% of the agents, at least here in Atlanta, Georgia. I know it can be 20/80 or whatever else, but to me, that's a huge problem. You should be, I don't want to say more level. It's a level playing field. It probably is much as it can be. But to me, this actually leads to that early adopters. So they're going to be the hyper users. Then you have this massive middle group of part-timers and half-timers and maybe agents that don't do a ton of volume. It's maybe more of a lifestyle business or whatever you want to call it. But they're going to adopt some things. They're going to make their life a little easier in terms of automation and stuff like that. And then you're going to have the laggards or the Luddites that never do anything with AI. And I think they're going to die off in the business, at least, because you have to move with technology. If we didn't do email, if we didn't have websites, we would have been out of business a long time ago. So I think those are the 3 groups that are going to be broken into. But I went to this really good website. I'll spell it for you guys just in case you want to go do this later. But it's Google, And I
Oh,
typed,
what is this? What is this?
what,
Goggle?
what can a real estate agent do that AI can't? And this is actually an interesting answer because I hadn't really thought about this way. I mean, obviously we've talked a little bit about this in the past, but and I'm sure all these masterminds and everything are mentioning some of this stuff, but really you can't replicate the experience. You can change the dynamic of the experience 100%.
Okay.
The intuition, if I know what area you're looking in, AI can figure that part out. But if I know that you should, if you're looking at new construction as an example and it doesn't exist over there, it's going to take a little bit of time for all of these data points to catch up eventually. And the good thing is, if you have relationships, you'll never be replaced, in my opinion. Intuition and then personal touch. So, and those are all really important things, I think, that we do with our clients, that we have with our clients that cannot be touched. But I do think there will be an interesting shift, if you will, in the way that we maneuver with it, because you're not going to stop it. Like technology
Well,
is going to keep moving faster than ever before, probably.
let's take a look at this. I asked Chat GPT. What can a real estate agent do that AI cannot?
Hmm.
And it says, while AI has made significant strides in recent years, there's still certain things that a human real estate agent can do that AI cannot. Here are some examples. Open the door. No, I'm kidding. That's not it. That would be funny though if that's what it says. Open the door. That's it. That's all. No. Emotional intelligence, it says. Real estate agents possess emotional intelligence, which allows them to understand and empathize with their clients. Why can't I say that word? They can pick up on nonverbal cues, listen actively, provide personalized recommendations based on their clients' unique needs and preferences. But you could, as a rebuttal to ChatGPT, I could say, well, yeah, I could load our unique preferences into ChatGPT and then it could output that information, right? Seemingly that would solve that. The only thing you're left with is not understanding the emotional cue. But here I think is the issue with that. Our clients tell us some things about what they want in their property, and we go deeper than the number of bedrooms, bathrooms, square footage, and area. Right? I want to know how they want to live in their home. And then I can find options for them that they may not have considered because of the number of bedrooms and bathrooms don't quite match, but the space matches.
Yep.
And we talk about how we can convert this space, get them a better deal on the product. And then they have a wonderful investment moving forward because they've converted this to actual usable space. So that's something that there's no way ChatGPT could do. That's also something that most realtors can't do.
True.
But most realtors go and they sort by bedrooms, bathrooms, square footage, and area. And then the reason why most realtors have to do that is because the data in the MLS, which is then transferred to Zillow, is only as good as the worst real estate agent inputting the data.
Exactly.
Right?
Yeah.
It's not. So you can't, like, I can't even go to our MLS and sort by a garage or not, because there's real estate agents that don't check the blasted box that says it has a garage. If everyone would check the box or not, if it doesn't have a garage, then I could sort by that information. But if I sort by that information, I come up with 10 missing listings because there's 10 agents out there that didn't say, yeah, this has a garage. So as long as there's humans inputting the data, there's going to have to be a human model to sort the data. Right. Because if you told a Chat GPT plugin with Zillow, it has to have all this and a garage. Well, that's not going to work because in our area, you're going to miss those 10 listings that me as a professional, I'm going to find for my clients.
Right. Well, and the negotiation is a huge part, obviously, too, that can't be replaced. You can to your point, as far as the input goes, and leave a comment down below if this has ever happened to you, because I have a feeling chat's about to blow up. But you've gotten to a property and something that was checked is not there.
Oh, yeah.
Or the other way around, right? You get to the property expecting something and it's not there. Like, to me, that's the easiest part. And communication, I really think, is going, because there's a lot of friction in the beginning. If you think about it, you got a listing appointment, how you got that listing appointment, the pre and post work that goes into that part is really, really hard to duplicate. But as far as pricing and negotiation, that's why we get paid what we get paid, and direct correlation to the problems that we solve. And especially in the last 3 or 4 years where it's been all over the place, if you missed it by a week or two, then you were sitting on the market for a long time, or you left money on the table, right? So I think those are the only couple things I can think of at the top of my head that, we won't be replaced for. But to your point, I love the creative side of things because I don't have a creative bone in my body. that I can put in for like a listing description, because that's the worst part about a listing for me is like trying to figure out how to write this grandiose story about this house.
Oh yeah.
So yeah.
Rebecca said that people don't always know how to communicate what they want or need. So it takes intuition and a good agent to read between the lines. That's smart too. Hillary says that also the different ways agents describe the same feature. Yeah. Some put just SS. Everyone in the industry knows what SS is, but a lot of consumers are out there like, what is SS washing machine? Oh, it's stainless steel. Oh, accuracy of information is a major issue. And then Olivier says, or even some information is subjective. I want a turnkey house, but Matt's definition of turnkey may not be the same as Ray's. That's a good point too.
Yeah, you don't know what turnkey is.
So Chat GPT lists these other things. It gives them a description of each. I'm just going to tell you what they are: negotiation skills, local market knowledge, personalized service, and building relationships. That's going to be the key. You want to see what it looks like? Let's take a look. I have to share my screen here. Get this button here. Let's take a look at what the actual app looks like. So if you wanted, where is it? Oh, that's a Chrome tab. It's not Chrome. There it is. All right. If you wanted to use Zillow's Chat GPT plugin, this is what it looks like. So I'm going to put, this was on their press release. Somebody types in, just got a new job and looking to move to Phoenix. And Chat GPT says, that's great news. Congratulations. Please let me know your preferences, such as budget, blah, blah, blah. And then it says, we're looking to buy a place. It'll just be my wife and me. We need some space for an office. And then it proceeds to pick 3 different options from Zillow and then shows the pictures in a slide down below. And then the guy says, could you show me homes that are in the $475,000 price range? Can you show me the ones having open house this weekend? And then the Zillow bot, with the Zillow integration with Chat GPT, shows him 3 homes, gives him the details, another slide at the bottom, some information about Phoenix, and then that's it. What was that last thing? What did it say? It says, this is the part that always bugs me about Zillow. Let's watch the very end here. Chat GPT's response. You're welcome. I'm glad I could help. Enjoy your visit to Phoenix. Have a great time exploring the homes during the open houses. If you have any more questions or need further assistance, feel free to reach out. It did not say, let me make sure it doesn't say it. Let me move this. I got to move this thing is in my way. Hang on. How do I move it? Oh, all right. It says, feel free to reach out. Good luck with your home search and congratulations once again on your new job. What is left out there, in my opinion, is glaring. It's not saying, feel free to reach out and I'll connect you with a local professional who can help you, blah, blah, blah. Like that would to me be the thing that turns it to where it's like, oh, they're actually for us, but it doesn't feel like they're for us because nowhere in here is a real estate agent mentioned, listed. They don't say, let me partner you with one of our premier agents. It doesn't say anything like that. It's just, here's all the info. Go see these open houses.
Yeah, which if you were one of their premier agents, you should be upset about that.
Yeah, this is not it doesn't look like they are using real estate agents in any way for this, except for the data entry. So,
which hopefully is right. Hopefully that open house actually exists from 10 to 12.
Yeah. Everyone in the industry knows that has 86 offers and they're looking at offers on Saturday, but Zillow thinks that it's still having an open house.
That's right.
That's the reality of that situation. Consumers.
That's true.
All right. So in short, then, you don't think ChatGPT is going to kill real estate agents' jobs?
I don't. And, again, I've looked at a couple different, there's these like risk calculators that you could go find about different jobs, about different industries and the future of them. And
creative artificial intelligence.
Yeah. Well, and as it really, exactly. Hey, ChatGPT, will I have a job in 5 years? So I looked at that and the reason we have a low risk is because we're such a high touch thing, right? Like I was at an inspection earlier and spent, probably 50, 60 minutes with a client face-to-face that I had spent maybe a couple hours with, seeing other homes, a lot of FaceTime. They're moving from Julie Moon's area, actually Athens. And, we spent maybe 3 or 4 hours face-to-face, but anything I can do to get more face-to-face with clients is where I really differentiate, right? I can talk about the market. I can talk about negotiations. They can read between the lines. These are smart people, but they aren't in it every single day. Yeah, they're looking at Zillow, or yeah, they're looking at Redfin or whatever else, but they have to take all of this information and then try to, decipher it down to, how does this impact my home search today, this week, this next month? And that's really where I think we as professionals and as market experts shine. But
Yeah.
Justin Conoco, our friend of the show, said he had a great post on this as far as like, will Chat GPT replace me? And I thought it was really interesting to kind of hear his perspective and see his thoughts on it, because I like Justin a lot, and I think he's a pretty smart guy. But I think until it decides to grow legs and arms, he says, and go buy a shovel, I'm good to go, which I thought was pretty cool. But beyond that, it is the relationships, it is the market knowledge, it is the negotiation. Like, there's so much that we do on a daily basis as good agents that is irreplaceable.
Yeah. Right now, it can't call the other agent and have and recognize, after you ask a question, the pause in that agent's voice, and that they normally don't pause like that. And it can't recognize that's a cue for your client to get a better deal or not get a better deal. Like, there's all these little things that over 17 years in the industry you develop and you're really, really good at, to where, like, I love to negotiate with agents in a way that at the end, like, they're like so friendly and kind, and they think we've been best friends, but really I've taken them for all they're worth. That I love that style of negotiation, and it's also good for the business. It's good for the industry. And there may be people that can do that. I mean, I doubt it, but there may be a couple of people here and there that could do something like that. But when you start to think through the realm of things it can't do, they're very nuanced. Mm-hmm. The things that it can do, I jokingly said earlier, what can't AI not do? It can't open the door, but in reality, it can. Like, in reality, you can set up an appointment. They could have a special door lock on there. The door opens and you're in.
Yep.
It can't monitor the client throughout the home. Well, I mean, that could be set up for vacant homes to put cameras through, so it can monitor the client, see where they're spending the most time, and give them information and feedback as they're walking through the home. That could be done. You could take a tour without even being in a home these days with the 360 tours. So what now does an agent do? Prepare documents and paperwork? Well, Chat GPT passed the bar. So what do you need a legal contract for Arkansas, legal real estate contract? It'll just write it up for you. Is there a little bit more risk there because you're taking in your own chance? Yeah. But what are you saving? Are you saving money? Aren't you saving money? So I think for a lot of agents, all the little things, the little tasks that we do that people think is part of a real estate agent's job, those things that can quickly be eaten and devoured by Chat GPT or whatever the AI is, will. And I think as it becomes more and more popular and more people start to use it all the time and realize what a valuable tool it is, then that takes value off of the agent. So either an agent has to figure out their value proposition and change and figure out how to add more value to the marketplace, or they're going to be left behind in a way, and we're going to see dropouts like never before. Mm-hmm. But I think the groups and the agents that can figure out how to provide more value by using the tools of artificial intelligence and Chat GPT to cut down on some of the workload. And because that's cutting down on the workload, like in the future, could my client go and say, hey, I've sent my agent these homes, sort these by the latest showings and set up these showing times for us. We're going to go. And could they do that and set up all those and have automatic door locks that open and they just go willy nilly and see the houses? And then I meet them later and we talk about it and I help them. Yeah, we can. But if I am ignorant of that as an agent and don't see the opportunity that if they're doing that, then what could I be doing? How could I be adding more value to that? Mm-hmm. What's the research level that I could be doing then to actually, go and get master plans for them from the city and, more information, and here's what's happening and here's how it's growing and developing. And here's what there's so much more that I can do in that context because I'm not having to sit down and look at a map and plan all the showings for those 10 houses that they want to go see tomorrow. Because they've already got the plan. I just got to show up and go with them.
Yep.
So I think the agents that win are the ones that look at the time savings of, hey, if ChatGPT is going to be able to take care of that for my clients, then here's what I get to do for them. So they look at the time savings in order to improve service models Those are going to be the winners. The losers are going to be the ones that assume that the savings in time gives them more time to where they don't have to do anything. Because if they're not adding value, their customer is going to lose the trust and they're going to be the ones calling for a rebate.
Mm-hmm.
Hey, when we close, I want a rebate because I found the homes. I did all this work. I talked to Chat GPT. Actually, Chat GPT did most of the work. I should be paying it, but you're a human. That's what's going to happen.
Yeah.
So I think in the future, if you want to be able to secure your job as a real estate agent, you're going to have to find value propositions that artificial intelligence can't currently touch.
Yep.
And, you know, maybe it is 20 years down the road, 30 years down the road, by the time I'm retired. But I think agents and companies need to start thinking about those things now, because if they're not, they're going to be toast. You know, Real integrated Chat GPT, but we didn't integrate it on the consumer side. We integrated it to support agents. So there's a Chat GPT plugin called Leo that is going to be helping to support agents through our back-end systems, making our company run more efficient so that they can give the agents more money. So if companies aren't thinking about using these things to support their agents, then I think they're going to be missing out in a huge way.
Yeah.
Huge
Well,
way.
and our walk away, our homework this week, if you will, could be to call our last, year or two of clients and say, hey, what value did I add to this transaction?
Yeah.
Because if that's, and to your point, everything is possible, I think, in terms of the tours and the scheduling and the showings and everything. I mean, all of that legitimately now is possible. And if you don't think that's possible, you need to go tour some more homes that have tons of cameras in them and the automatic locks and everything. I mean, Orchard and a couple of these other iBuyer programs had really, really slick systems out there a year ago. So,
Yeah.
But go ask your clients. It'll be a good touch for you this week to say, hey, Mr. and Mrs. Smith, I know it's been a year. I'm just curious. What were the top 2 or 3 things that I added the most value to this transaction for? Or what do you think that, I could have done better? Any of this stuff I think is valuable, because that will be your answer. That will be what you have to do in the future to get more business and also exceed, any expectations in the future.
Speaking of more business, Matt, where can people find you if they want to send you some referrals to Atlanta?
That was smooth.
That was pretty good, right? We're getting better at this. After
really
5 years in the game, 230 shows, getting a little bit better at the production.
I appreciate it. On the gram at Matt LaMarsh, LaMarsh, just like it sounds.
There you go. And you guys can always find me on the gram, Razorback, RAYZORBACK. Thanks, Matt, for joining me today. I really appreciate you dropping by.
Yeah, thanks for having me.
Yeah, and we'll see you guys next week.